From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for November 15, 2016. In just a moment, I'll be taking a look at the NZDUSD, the New Zealand dollar versus the US dollar for today's trade analysis. But first, a recap of a couple of the trade suggestions made since yesterday's trade analysis video and live trade room. First off, starting here on the USD CHF, the dollar franc, we knew that if we wanted to buy this currency pair, we needed a pullback because it's very difficult to buy something at the highest high. Remember, buy low, sell high. So we're at the very highest peak high that we've been for the past several months, truthfully. So as we challenged just underneath the 1.0 level, the pink shaded area at the very top, we knew that we wanted it to dip down. So yesterday, placing a buy order down around the 99.50, 55 level, as it dipped back down to the blue zone, became the opportunity to target back towards the resistance high. So let's put an arrow here. The blue zone was our potential entry point because it pulled back down into support, targeting back towards the resistance high. Of course, we know that the resistance high is the pink zone. That's the 1.0 level. If we can see this currency pair break through the 1.0 level, the parity level here, if we can get through that pink zone, I think we're back up here towards this yellow shaded area, which is all the way up into the 1.0050 to 70s. That's the yellow zone at the very top of the chart. So that's our goal. We need the market to break through parity, break through 1.0 to go all the way up to the 50s and 70s, the 1.0050s and 70s into the yellow shaded area. If it doesn't, we could see it bounce back down towards the 99.50s and 40s, the blue shaded area. So we're in the trade, 99.55. We're protecting profit. Can't lose on the trade. That's the biggest thing. We're in the break even. Can't lose. Might be a good idea as it settles out underneath 1.0 to close some profit if you have the ability to do that. But definitely a profitable trade. Just we needed to get through 1.0 if we're going to see the continuation of profit here for the dollar franc. Next, moving over to the USD JPY. Yesterday, I was looking to buy into the 1.0070 level. I'm going to go ahead and take it down to the 4-hour time frame. I had a pending buy order just about all day long at 107.70. The green shaded area here on the top of the chart never went down deep enough to take me in. Came very close here, but never went down deep enough to take me in. So I've removed that pending trade for now because I think if it gets through the orange zone, it's just going to continue on up without us. Let's move on over to the AUD USD Australian versus the US dollar. Yesterday also had a pending trade here, 75.75, 0.7575, the bottom of the pink shaded area, which is all the way down here at the very bottom, right there where my black arrow is. You see that little red arrow? What that represents is the fact that I got out at break even. I got in the trade here. The market went up, took me into the trade, went down to the yellow zone. So after that first touch there, it went all the way down, saw 30 to 35 pips of profit, came back up, took me out at break even, and now it's come right back down. So status quo here. If it rallies, you have an opportunity to look for it to go in short again, break underneath the yellow zone, 75.40, look for it to go lower. I don't see any real reason to go long yet. We're at support, but no real reason to go long. So what we need is a breakout of this congestion that you see here in the blue circle. Lower, of course, looks for the continuation of the downtrend. I don't think I'm looking for long opportunities unless maybe it breaks back above 7,600 and the top of this pink shaded area where we took the short. But again, I don't think there's any reason to go long. I think we're short on this currency pair only and looking for it to break 75.40 for the next opportunity on the Australian dollar. Next, moving over to the NZD. Here on the New Zealand dollar, we're in this one as well. You can see the trade at the bottom, 71.15. Looking to go short in the direction of current trend, momentum, and sentiment. But we're at an interesting area here for this currency pair. We focused in on this yesterday during the live trade room. Two different things we want to take a note of. First off, the long-term black trend line. Isn't that interesting? We're coming right down into that. You'll see that in a moment. So long-term black trend line. Want to make sure you see that. Zoom it in a little bit. You see the blue trend line right here, kind of sloping shallower, connecting with this low back here, connecting with this low where the blue circle is, and we're just above that now. So we're kind of toying around with two little uptrends, even though the bearish momentum is pretty clear here. We've also noted up here where this upper below trend line is the potential of the head and shoulders pattern. We need the breakdown of a low to really confirm that, and that would be the break of the blue trend line, the purple shaded area, and likely 70.50 or so. So some interesting things happening here around the 7100 level really is it. Let's zoom it in one more time. Again, there it is right there. You see the black trend line toying around with it for the past couple of days. The blue trend line just underneath the market, hasn't made it all the way there. It came very close here yesterday, but we're toying around here. My expectation, with trend and momentum, let's talk about trend and momentum, which is the last 4 days, 5 days that we see here. If we're going to play with that, we need to go short underneath 7100 or underneath the blue zone, let's call it. And these last supports that you see right here, you see those supports right here? Let's look for a break of that to go down to the purple shaded area at the very bottom. That's at minimum. I mean, it could go lower than that. Of course, if it breaks the purple zone, we're looking for it to go much lower, all the way down into the 6900s, the orange shaded area you see peeking in at the very bottom of the chart. So that's the main focus, trend, momentum, sentiment. If we're going to trade that, well, we had the cut of interest rates in New Zealand. We've had a pretty strong dollar over the past week or so. So if that's the direction, we need the break of the blue zone, target the purple zone, and then the orange zone. The risk is, of course, always there that the market doesn't do that and turns around and goes back higher. So we know what the risk is. The risk is it turns around and goes back up towards the yellow zone or higher. All right, so there we go. That's the setup. Now, how do we trade it? Take it down to the 4-hour time frame. Yesterday, we noticed that the market pushed underneath, stayed underneath, pushed underneath, and stayed underneath the blue shaded area, becoming an opportunity to go short under the blue shaded area. Well, we did take a little bit of a small opportunity yesterday. It did take us out on that spike, but I've gotten right back into it again. I'm not letting it deter me. I think as long as it stays within and underneath this blue shaded area, I'm looking for short opportunities. I'm already back into it at 71.15, but about 10 pips better than we were yesterday. I'm still looking for it to now take a turn back down towards in the direction of trend, momentum, and sentiment. I'm looking for it to make a turn. I'm trying to get that little black arrow there. So like, there we go. So I can pull it over here. Looking for it to continue down towards the purple shaded area or lower in the direction of the trend, break out of the blue zone, staying underneath these last support lows that you see over here on the far left-hand side of the chart. The risk is, of course, a break above it. I now have my stop. It's a 35 pip stop loss, so it's not tremendously terrible, but it's just above that spike high now. Just to be sure I stay in this one and look for it to go down to the purple zone or, once again, the orange zone down into the mid 6900s for the New Zealand dollar over the next few days.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.